Is it all over? The stock market, that is. We're going to explain what's recently happened with the crash, and we're going to reveal to you some inside trading, and maybe this entire thing was done on purpose. These are some of the highlights we're going to cover. The market is extremely risky right now, but it does provide opportunity. Very important average. And then what did Jerome Powell say, which he said before, and we had the same result. Trump and Elon. Did Trump and Elon crash the market on purpose? Well, I'm going to provide some evidence, but that might suggest that's the case. CPI and PPI was a beat. Jobs report was also good. Other metrics were good, but why was the Michigan report so bad? The tariffs. Does Trump really want high tariffs? And then the debt, the rates. All of this is going to be explained in this live video. I'm making this unedited as it happens live to give you the chance to react to me as I make it. Many people are watching me live right now, and I'm doing this live, so it'll go the way it goes. I'm in the studio on my own, adding all these special effects and overlays to try to bring you the best information done live, reacting to the market as it is. So let's get straight into it. I hope you find this useful, because I think by the time you've watched this live stream and video, if you're watching it later, it might make you feel a bit more confident, or maybe give you a bit more of an insight, because we're also going to share with you some very, very interesting inside trades that I can prove to you, and perhaps to suggest that this whole thing was done on purpose. Shall we get straight into the video? Have you all tapped the like button? Have you considered subscribing to the channel? I hope you have. It really does help us. Let's start from the beginning, and let's see if you agree with me. We do have a poll running live right now. I have asked that you could vote during the video once you've got the answers from me, and then please vote then. All right. So let's talk about the stock market and where we go from now. Over the last few weeks, we have seen considerable selling in the market. Should we be concerned? Well, it all comes down to a couple of things. Are you an investor or a long-term investor? Sorry, I meant to say a trader. I told you it was live. A long-term investor, or are you a trader? If you are a trader, you're focusing on momentum, you're focusing on news, and you're trying to catch the bottom, catch the top, and make those trades. For me, though, I'm a long-term investor. I see when the market goes down as an opportunity to simply buy more. Over the last few weeks since Trump came in, it's been one of the worst starts to any presidency, really, when it comes to the stock market. We know that Donald Trump likes to look at the stock market. So what's going on? Well, he recently reported to be saying he's not paying attention to the stock market at all. He's not noticing it or worried about it at all. He's not even paying any attention, which is interesting considering that he lives by watching the stock market. And we know from history that he likes to watch it every day, as I do. So it's a bit strange that he hasn't done so recently. So what's going on? Well, it's all about tariffs. But is it really about tariffs, or is there an ulterior motive to all these tariffs? Well, we're going to discuss that right now, and I think what I'm about to show you is going to alarm you. It's going to scare you, but also give you an understanding of how the stock market really works. So let's get into that right now. It all started a few weeks ago when Donald Trump announced the tariffs. He put increasing tariffs on Mexico and increasing tariffs on Canada. And then they were on, then they were off, and then they were on again, and then they were off again. And now it's all about the 2nd of April. And Donald Trump has said he doesn't want to focus on the 1st of April. That would be bad luck. Let's focus on the 2nd of April. Okay, so we've got tariffs coming in across the board around the world on the 2nd of April. Now, does Donald Trump really like tariffs? Well, we have to understand what Donald Trump really is. He's a businessman, not altogether successful. Yes, you might regard him as extremely successful if you look at how much money he's got in the bank and what he's achieved. Yes, but he has gone bankrupt several times as well. Now, you can argue many businesses do that. I myself went bankrupt once, a self-imposed bankruptcy, but nevertheless, it can happen. But it has happened quite a few times with Trump. But overall, you would argue he is a successful investor. I think most people would say that, and most people would say he's a successful businessman. So he knows the pain of tariffs. He's dealt with it. Tariffs cost money. They cost us money, the consumer, the businesses, everyone. I think there's something going on here with all these tariffs on, off, and I've talked about it before, that I do feel that it's a bit of a negotiating tool. But that's what we're all focusing on. There's a bigger picture, a much bigger picture. So before I tell you why I see these tariffs playing a much bigger role than just a negotiating tactic, I'm going to share with you an inside trade. You'll find this really, really interesting. So this story I noticed a couple of days ago. Look at this. It gives you an example of how the stock market works. Huntington Ingalls board members who almost never, ever buy company stock bought just before Trump's speech sent it sky high. Now, I've looked into this. This board never, ever trade. They just own the business. That's it. But all of a sudden, out of nowhere, this particular board bought a ton of stock. Not that much, actually. But nevertheless, they did something that very, very unusual. And it was just before Trump made an announcement. 3 directors of Huntington Ingalls Industries, one of America's largest military shipbuilders, hadn't bought a penny's worth of stock in years. But last month, just ahead of President Trump's State of the Union address, that included a surprise promise to resurrect the US shipbuilding industry, they decided to place buy orders. Huntington Ingalls chairman, retired U.S. Navy Admiral Kirkland H. Donald, and directors John K. Welch and Thomas C. Schwenbein bought stock on February the 27th, 26th, and February the 13th, respectively. Trump made his shipbuilding proclamation on the evening of March the 4th, catalyzing a 12.4% spike in Huntington Ingalls shares the next day. That was the single best day of the company's stock since it went public in 2011. So this is a very, very significant thing. If I show you here the actual trades put together for you here, look, you can actually see when Donald Trump, when they make the announcement, let me just, where has it gone? My little numbers have disappeared from the screen. I'm making this live, folks. I can't see where it's gone now. Anyway, never mind. February the 13th, they bought here. February the 26th, they bought here. February the 27th here. And there you can see the spike. Now, they never make purchases. This company just hold their stock and don't do anything. Well, that shouldn't surprise you. These sort of trades happen all the time. Nancy Pelosi is famous for making trades like this. Remember when she flew across the world and everybody thought the plane was going to be shot down? You remember that, when they were going over to Taiwan to do a deal just before she bought, and then on the news, the stock popped up. This happens all the time. So the markets are without doubt manipulated. This happens all the time. We shouldn't be surprised. And this is just another example of it happening. Now, we all know that the markets trade primarily on certainty. If you are an investor. You've got money. You want to make sure that your investment is safe. You're not going to put your money in the stock market if you feel that there's uncertainty. So you take your money out. Wall Street know it. Trump knows it. The overall markets know this. And retail investors then get scared. But retail investors have behaved differently this time. Going to explain that in a second. It's a very different situation than we've ever seen before. Now, we know about inside trading. We know about stock manipulation. We saw what happened with the Trump coin when he announced it on his inauguration. It popped up and now it's one of the worst performing of all time. He sold it. His family sold it at the dinner table, and Barron, their son, was about to release his own coin and it was stopped because it looked too obvious. That actually happened, and I had verification on that. Now, when the stock market started to trim off, it did something unusual. It went down faster than it's ever done in history over this period of time. It went down below the 200 moving average. And at the same time as that happening, we had an announcement from Jerome Powell, the chair of the Fed, who we are covering, and it's very important. We are covering live on Wednesday. You have to tune into this. The Fed report, we might get a surprise rate cut. No one's expecting it. Remember, always expect the unexpected. No one's expecting it. I'll give you the link for that, and at the end of the video, it'll also be pinned to the comments, and you can actually join me for that live event. Jerome Powell made an announcement just after we dropped below the 200 moving average, being really bullish on the markets and suggesting that rate cuts are coming. He doesn't normally do that. Now, the last time he did this was when the markets fell off a cliff back in 22, and we know what happened next. They rallied. Now, we had a good CPI report. We had a good PPI report. The jobs report wasn't too bad either. So why has the markets gone off and sold off so much? Well, uncertainty. But we know Trump doesn't really like tariffs. What Trump really wants is global free trade. As he said before, he wants everyone to match him, or we'll match them. So whatever you put on us, we'll put on you. Ideally, take away all tariffs and we have a global trade, and no one pays tariffs at all. That would be great. That would certainly be great for the American economy, being the strongest economy. We'd probably come out on top. So Trump knows that. Now, the Michigan report was interesting. That came out a few days ago, and you may remember the Michigan report, which is completely biased. It's a political stunt, and I'm going to share this information with you. We covered it live on our show. I'll give you a link for that as well, and you can watch what happened with the Michigan report. The moment it came out, exactly at 9 a.m. Central Time, and I'll give you the link to the video at the end, it went down significantly, but this time it bounced right back up and went up again. So there's an important lesson to be learned there, and I'll explain that in the video. You'll have to go and see that. But this here is what came from it, okay? Consumer confidence hits horrific, with fears last seen since the Great Recession. Now, this is important because this is very significant, and Trump knows all of this. So is all this being done on purpose when all the companies in the S&P, 60% of them reported on beating on earnings? PPI's good, CPI's good, GDP's okay, jobs report okay, cooling economy okay, we're going to get rate cuts. Everything seems to be going okay, but yet we could be heading towards a Great Recession. Some even mentioned the Great Depression of the 30s. Well, this sentiment was done by a very political Michigan report that wanted to make Trump look bad. No matter what he said, no matter what he does, they're going to make him look bad. Now, be under no illusion that this video is not political at all. I'm completely impartial. I'm a green card holder. I can't vote and wouldn't anyway, as far as this show is concerned. I want to be completely factual, give you information, what both parties say, and so you can make an informed decision. Remember, I only own the S&P 500. I'm not here to pump and dump stock. I'm here to give you the best information I possibly can. But look at this, and then we're going to come on to why Trump maybe did this. And I think you'll be quite surprised when I explain it. Unemployment fears surged to levels that were seen last in 2007, 2009 during the Great Recession, as the March Michigan Consumer Sentiment Index plunged to 57.9 from 64.7, which is well below the consensus at 63. The Consumer Price Index, CPI, for all time fell in March to its lowest level since 2022. Now, look at this. This is the sentiment. Now, this is basically what we already know, but it's a politically swayed sentiment report. As like I said to you before, to always make Trump look bad, even if it was good news. It's just a feeling of how people feel. It's a sentiment, how we are feeling. It's not based upon actual evidence. It's based upon we think Trump's doing a bad job. The tariffs are going to be a disaster for the country. And this is how we feel about it. And as you can see, the headline index was down, lowest level in March. We can see current conditions index, lowest level in March. Expectations, lowest level in March. You can see it here. Now, what this is basically telling us is that they're trying to suggest that everything couldn't get worse. This is really, really bad. It's like it was in the Great Recession, maybe the Great Depression. But the figures weren't that bad. You feeling bad about it because you don't like what Trump's doing is not really what we should all be focused on. It's what you feel. When I first came to America, one of the things I asked my wife, I said, what's the main news? I don't want people's opinions all the time. I want to hear the news. And my wife didn't even know what the main news was because there are so many. And they're all opinion based. And when I first came to America, I'd watch CNN and then I'd watch Fox. And it just seemed to be one loves Trump, one hates Trump. When I first came, Trump was in power. And it was just a personality contest, and I just want the news. So this sentiment report is exactly the same. It is basically done to drive the market down and so on and so forth. Now then, is there a reason why Trump would want the markets to go down? Why would everybody want the markets to go down so badly like they have? Well, I'm going to put this to you. Trump and Elon. Elon Musk, because of Elon Musk's relationship with Trump, he's upset a lot of people. Look at the stock price of Tesla. Look at this. It's one of its worst performing times. Let's go back over the month, the 3 months. It's down 45% over the last 3 months. Year to date, 38%. Why? Well, all around the world, people decided to turn away from Tesla. In Germany, they're actually putting out petitions not to buy a Tesla at all. And in fact, in Germany, we've seen a rise in EV sales, but not with Tesla. Because of the tariffs over there in Canada, they want to put 100% tariffs on Tesla. So Elon can't sell Teslas right now. Awful. If you look at my overall position today, I'm up 0.91. This is the S&P 500, of which Tesla is a decent part of it. Not the biggest part by any means. Microsoft, Google, Nvidia are much bigger. But nevertheless, it's one of the Mag 7. Should it be any more? Well, people often ask that. But look, the S&P is performing well today. Why is it performing well? And let's talk about why it was down in the first place. And did Trump drive it down on purpose? Let's go back to this point here about Elon and Trump. Elon Musk knew. He knew that the stock price would be hit. He's seen it before. He knows if he makes political rants or he gets very biased about one political story, he will pay a price. However, he's continued to do it. Now, some people would say because he wants to do Doge and he's there to help people and that's all great. Good for the country. Or is it to drive down the markets for a much bigger thing, including Tesla? Well, I put it to you like this. Debts. The debt ceiling. The amount of money that is borrowed by the United States. Let's finish off by talking about that. And I think this will make you look at the markets in a completely different way and why I've been buying the dips and never the pumps. Let's talk about it now. Here we go. I'm going to spin round again and bring you back to that screen. That's better. So, one thing that hasn't been considered is we don't believe for a moment that Donald Trump actually likes tariffs. I actually think he wants to form a new world order. Him, Xi Jinping, Putin. Forget the G8, forget the G7, the G3. Just 3 countries. I think he would like a completely open free trade with no tariffs for anyone. Well, why is he putting all these tariffs in place and threatening everybody? Well, we know because it creates uncertainty and it creates people to come round the table and talk once again. But what it also does is it drives the market down because the market is uncertain. And we know that Trump would know that. There's no surprise there. Why would Trump want the markets to go down when he loves to see the markets go up? He likes to report on it and tell everybody how amazing it's been and how it's great because of him. Well, recently, when the market crashed, reporters weren't allowed in the Oval Office to ask the question. He avoided the question. Well, I think it's this. I think it's this because of the partnership with Elon Musk. They're both doing the same thing. I think he wants the markets to go down to force the Fed to lower rates, which is why it could happen this Wednesday. I don't think it's going to happen on Wednesday, but it could. And it could surprise everyone. Because everything else in the economy is generally okay, generally going in the right direction. Interest rates are coming down because inflation is coming down. We know Jerome Powell doesn't want to lower rates because of pressure from Trump. We want him to. He said before he's based upon the numbers and he's looking at the data to go on that, not political moves and so on and so forth. However, if Donald Trump can drive the markets down to such a level that the economy cools and the Fed is forced to cut rates and be aggressive, what do you think that does for the national debt? Trump wants to come and bring a big headline. He wants to win big. Imagine if you can bring the rates down. And you can bring them down by a percentage point and then another percentage point and get them down to 2%, somewhere in that region. How quickly could you pay off the national debt in correlation with what Elon's doing with Doge? They could probably wipe out the debt altogether. So I actually think the markets have been driven down on purpose, extra volatility, extra uncertainty, all the noise just to get the rates down. We know as a businessman, Donald Trump hates high interest rates. He wants to win. He likes to always win. And I think he wants to beat Jerome Powell. He wants to get the rates down. It could come as a surprise on Wednesday and rates go down on Wednesday. This Wednesday. If they don't go down on Wednesday, they're definitely coming down in June, and there could be 3, 4, even 5 rate cuts going forward through 2025. We know small businesses respond to rate cuts, because today we've seen how Virgin Galactic is reacting. You will see on the Russell, smaller companies will benefit massively from rate cuts because it provides the opportunity for new, smaller businesses that want to borrow money, that are already borrowing money, a catalyst, drive them up, and also allow more businesses to IPO and get a start. Trump would like to see that. So I actually think the reason why we've got all this selling is because Trump wants to create havoc and uncertainty to drive the market down, not for tariffs. The end goal is to bring the rates down to pay off the national debt. I think that would be his biggest legacy. I think he would absolutely love to do that. So how do you win as an investor or a trader with all this uncertainty? Let me cover that now. So for me, I'm primarily an investor, not a trader. Yes, I will trade on my Roth IRA because it's tax-free, and I've traded 23 times and I've won 23 times. Over the last few months, I've been buying on the way down, paying ever increasing or ever reducing prices for the S&P 500. I'm all in on cash and I'm all in on margin, but I do have an income. I don't recommend anyone just buy on margin if they've got no income, if you're not intending to trade and sell and reduce your margin. I have an income and every month I get paid to reduce my margin. When things start going up, I'm going to be paying down margin and not buying any shares. When they go down, I keep buying. And let me show you what I've been doing with my real shares, my real money. I'm 100% in the S&P 500. This is my real money. And you can see 99.96. I've got 502 shares of the S&P, which is $260,000. My highest ever value, even though it's down, because I've been buying more on the way down. My Roth IRA, 100% in the S&P. You can see there, 100%. Another 70 shares. So in total, 572, near 573 if you round it up. A lot, right? In fact, $300,000 worth of the S&P 500. And what I've been doing on the way down, I'll show you my real trades, my real money, my real history. If I scroll down here and open up my history, you can see all a few weeks ago, I started buying 548, 546, 543, 542, 540, 534, 533, 531, 530, all the way down until just last night, another 2 shares at 514. I'm all in. I couldn't be more all in. Okay. I believe we're going to get a really good rally. I believe that in one day, my portfolio could go up now $60,000 in one day. It might not happen like that. It might happen gradually over time, but it could be a $60,000 day if we get the rates drop on Wednesday, if not next month or in June, and we get some tariff news all at the same time. This could be fantastic. We could get a $60,000 day. So what do you do? This is what I am doing. This is how I'm playing it. What do you do? How do you play this? Well, the reason why I buy the S&P is over time, it's been proven to be the best asset, the most stable asset you can buy over time. And I don't need to ever sell. Because when you sell, you have to pay 20% tax if it's on your main account. I don't want to ever sell. Eventually, I'll borrow against my portfolio, which I anticipate will get to $1 million by the end of the decade, without ever adding any more shares, just by paying down my margin. And once things start going up, that's what I'll be doing. If you want further information on how to use margin and what a margin call is and all those things, I've made full videos with real live experiences, unedited as it happened on the show. I'll give you those links at the end as well, so you can go and look out all the margin videos that I've done where I, on paper, got a technical margin call. I didn't actually, because I acted on it, and I'll explain all that in that video. But I've been buying the dips because I believe in the American economy. Yes, it's painful, and yes, it's frustrating seeing other people, other countries decide to form alliances with other countries because of the uncertainty. But I think the uncertainty all of a sudden is going to go away and surprise you. Overnight, it could disappear and everything could rally once again. Do not buy on the way up, because those that can will drop it to pump it, to dump it. Never ever buy on the way up. Feel confident and buy on the way down. Now, this time, I spoke to you at the beginning, retail investors are behaving differently than ever has before. And it's really kind of confusing Wall Street. What do I mean by that? Well, one of the largest inflows has been into VU, my favorite stock of the S&P 500. More people than ever, more retail investors than ever are buying the S&P 500. I would like to take some credit for that. Of course, I'm only a small channel with 74,000 subscribers, but even so, I preach on it all the time. For most people, it's the way to invest. More and more retail investors are doing that. And I'm really pleased to say more and more of my audience and my members are buying on the way down, not on the way up. What does that mean? Retail investors are maturing, are growing up, are learning how to invest properly. And it's messing it up really for Wall Street. Why? Because what normally happens is, you've heard of capitulation. With all this uncertainty and selling, retail investors get fearful. They don't buy on the dip. They say they're going to, but they don't. They're always waiting for a bigger dip. They don't buy on the dip. They say they do. They actually sell on the dip. And then at that moment, that's when capitulation happens, and all give up and get margin called or whatever they do, and they leave the game. And that's when Wall Street and the big institutions and the big investors buy back. This time, it's different. I'm a retail investor. My members are retail investors. And today, people in my pre-show were talking about, I'm buying the dip and I'm not selling. I like it. We're winning. This is really, really great. We're seeing retail investors buy and not sell this time. So things are very different. So because retail investors are buying and they're not selling, as like they used to, will there be a capitulation? At some point, Wall Street will decide to buy back in again. They should do. The S&P 500 went under 20 times earnings. It also went under the RSI for oversold. The overall economy is good. Trump's tariffs go away, rate cuts, boom. And why is it being done? Well, my opinion is it's being done on purpose for the benefit of the debt, to bring down the debt. Because if they have Doge and they cut costs, but bigger than that, cut the rates, they can pay off their hundreds of millions and billions and even trillions of dollars of debt by reducing the rate they pay on that debt. I know I am doing exactly the same thing on my margin. I am buying now when the markets are down, before everyone starts buying, because I know what comes next. The rate cuts, and then the market will go up. I will already be in, and my margin will get cheaper and cheaper and cheaper, but I'll already be in. I won't be chasing the market. And if I can manage my portfolio at rates of where they are now, when they come down, it's going to get a lot easier. So there you go. I would like you to vote in the poll. Do you agree that this was done on purpose? I also have another poll. I'm going to share this with you now. I'd like you to go and vote on that. This is being made in a live show, unedited. Here is my Here is my poll. In fact, I didn't do a poll. I can't believe I didn't do a poll the same as I did in the chat here. Never mind. I was going to share with you a poll. I'll actually put it out later on my community pages. Or do you know what? Do you know what? Let's keep it live. Let's keep it real. I'll do it live right now at the end of the video. Stay to the end. You can vote on this poll, and then I'll give you all the links to the FOMC report, my margin, and everything else I think you'd find useful. So the question I'm going to ask you is, I'm going to, if I go, the easiest way for me to do it quickly while you're watching would be to go to here and let's drag that from my X post. All right. Okay. Let's come back to here. I'll do this live while you're watching me right now. Okay. It's over for the stock market. Question. Was the crash on purpose? Wait till you hear the explanation in the video. Trump's crash explained. I don't know if that's the full link, so I'm just going to make sure I add the full link there. Let me put the link to the show in there. Okay. And I'm going to add an image poll. Here we go. Yes. Crash on purpose. Yes, crash on purpose. No, not at all. Or undecided, you don't know. And that's, you always have to have that option because there are some people who just don't know. And that's fine. Yes, crash on purpose. I'm doing all this live so you can see everything, how I do this. So here we go. Yes, crash on purpose. Should I do that as a down like then? Yes, crash on purpose. No, not at all. We'll call that an up like, if you like. An undecided, you just don't know. Okay, let me post that. I think that will do it now. Was the crash on purpose? Post. Okay, let's do this now. Give everyone the chance before I end this live stream to vote on this poll. This is my community page. Please go and vote on it right now. Let me come back to here and I'll give you the result after I've given everyone the links. So there is the poll. Vote in poll. Let me pin that to the top. There we go. If you could all vote on that. And let's see, now I presented my argument to you. Let's see if you think that this crash was done on purpose. This is no surprise to anyone. Let's see what happens. So we're going to go back to that poll. If everyone could vote on it right now, this will trend. It's much more important than the one in the live chat because it will trend on Google and a lot more people will vote on it. Okay? So let me just give your final thoughts on the screen as I end out this video. It did give the world a reliable, useful EV, said TJ Snyder. Elon's AI Grok was asked if Trump was a Russian asset. The AI said there was over 90% chance that Trump was a Russian asset. True story. That was just brought in by 1 of 7 billion. The debt gets lowered. We won't have to worry about our children inheriting it. That would be good. I will admit I just bought more shares of VU because of the knowledge brought to us here via Martyn Investor. Thank you ever so much. Vanessa, that's very nice. And you just voted. Great. Okay, let me now see. Hopefully by now you've done it and I can end this video. Let me go over to it now. I just posted it a few seconds ago. I'm going to refresh it on the investor pages and let's see what you said. 7 votes. Obviously, it just happened immediately. I've just done this like 10 seconds ago. Yes, crash on purpose. There you go. Carry on voting on that. Now, if that was done on purpose, this isn't a bad economy. It's a crash on purpose. Boy, you should have bought this dip. Simple as that. If it was done on purpose, and I believe it was. So there you go. I'm going to end this live stream video. I hope you all enjoyed it. What I'm going to do now is I'm going to send everyone to the extra channel and then I can come back with my next event. So I'm going to send you right now to the extra channel where we're live 24 hours a day, 7 days a week. We should be live there now. We are live there right now. Let me refresh the screen. I don't know why that didn't do it. Up to Daisy. I'm making a lot of things live here in this video, aren't I? I like things to be a bit more polished than this, but it is live and I am reacting to you. So there you go. Here we go. Right, there you go. All right. I'm now going to give you the link so you can carry on. We're doing an XRP live watch, 24 hours a day, 7 days a week. And in there, I will give you my next live show, live now. And I'm going to give you the link for it in the chat. It'll go there at the end of this video. There you go, live now. Replace the pin. There you go. That's it. So that's it from me. Thank you very much indeed for tuning in to this live event. I think so far you agree with me. Let me end the poll in the chat. Yes, the crash was on purpose. 70%, 163 votes in the chat. There is the result on the screen. I want to share that because people who are watching this video later on won't see that. So I want to put that in the chat so everyone can see it. Here we go. So this is how we voted today live on the show. 70% of people said, yes, it was done on purpose. And if it was done on purpose, you need to have bought the dip. And I hope you did. 164 votes. There is that. And what about this here? We had 7 votes a few seconds ago. I'll refresh it now. We now have 16 votes, 94% crash on purpose. There you go. Take it as you will. I think I'm right. I think you believe it too. So it was an opportunity to buy at the dips. The economy is not over. The businesses are not over. This was your chance to buy a dip. I hope you did. It's still not too late. Don't buy it when it pumps. It just keeps selling off. If you can, just keep buying lower and lower and lower. If when I get paid on the 21st, on Friday, if we are lower again, I will buy another 10 shares of the S&P. If it's higher, I'll just simply pay down my margin. And then boom, eventually I will be doing just fine. Thank you very much. Click above my head for all the links down below in the description and pinned to the comments. I will give you the margin videos. I will also give you the FOMC report and anything else I think you'll find useful. Over here, I shall put the FOMC report and I'll put something down here I think you'll find useful as well. That's it from me. Until next time, thank you for tuning in. The making of this, YouTubers tend to make videos, they edit them, they put them all out. I do them live. I try my best to do it live. That way I can react to you. You see the real live prices. I show you everything and everything is real. That's it from me. Now stay right where you are. It'll take you to the extra channel and I will give you the link for the next live event. Until then, as always, take care of yourselves and each other.